We'll see if it's going to be any better. I'm not sure. It's the worst technical problem I've had since I've been doing this show for 7 years. Okay, anyway, this is a very important chart in my opinion, so we'll wait and see. Good. Let's go on to the next one, and we'll look at the next chart. This is the one I think is I'm getting a lot of emails from people telling me how wrong I am in the market, and I certainly hope that I am. But this is the monthly S&P chart going back to 1994, and this has a tremendously bearish pattern with this 5-point reverse wave pattern that is like a derivation of the butterfly pattern. But the thing that's important is that the time and price parameters that you're looking at with this S&P cash is very, very symmetrical. That also tells you that you're really very, very close. I started talking about all this symmetry stuff about a month ago, pointing to November, because we had so many of these astro dates occurring. We have one occurring today. This is the 11th. We have another one on the 15th, which is Friday, and then we have the really big one that comes in on the 23rd, which is a Saturday. So most probably the market will be affected on that Friday the 22nd or Monday the 25th. It'll most probably be one of those 2 days, if that's what we're going to be looking at as far as timing goes. Remember, the timing part is the most difficult part of the analysis. The price part is better because this is what we base our analysis on as far as where we stand with the markets in the overall scenario of things. Now, I wanted to show you we are having a very slight divergence in the NASDAQ today. The NASDAQ has not been able to extend past the 61% retracement. This is also happening in the New York Stock Exchange Index. However, the S&P and the Dow have been able to get up to the 786 and beyond by just a little bit. But the NASDAQ and the other is, and the NYSE, which is the broadest measure of indices, is the one that is that I watch the most, and it has stopped right at the 786. So we're going to see if that's going to be a very important spot to hold on to today for the market. But we're rolling, folks. This is what it looks like to me. I was really bullish in March of '09, and I'm even more bearish more bearish now than I was bullish then, because we could have easily lost our whole economic system had we not been able to take a look at this. Now, I wanted to go back into history to show you something about these patterns, okay? And remember, these are really long-term patterns that we're looking at. And the one I'm going to put up is the monthly euro forecast from 2007. We were making a three-drive to a top pattern there. It was a perfect ABCD pattern. The expansion was at 1.27. And, of course, we've had that move down over the past several years, and we just completed what I think is another major top in the euro, which should take the euro down near par sometime in the next 3 to 5 years. So the Dow is up on the day, the S&P's up on the day, and stay with us.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I posted another chart into the room that hasn't too much relation to the stock market, but it's basically the junk bond market. And what I've done is I've done a comparison between the junk bond market and what the 30-year Treasury bond market is doing. And as you can see, the junk bonds have been outperforming Treasury bonds for a long time over the last 4 or 5 months, and that is because people are clamoring for yield, and they're not worrying about, what the rating on the thing happens to be or not. That's another indication that something is severely wrong in the market, because when people start looking for yield as opposed to quality, that usually turns out relatively poorly. Bernard Baruch said, don't be concerned on the return on your money, be concerned on the return of your money. And that's one of the things that we're looking at when we watch this Treasury bond chart versus the Treasury note chart. As we know, yields have been going higher lately because bonds have been dropping. And so we were thinking that this was going to happen for quite a while, and it's continuing, but now we're starting to accelerate. At least the yield on the 30-year bond has started to, move higher. We're almost at 4% in the 30-year bond, and we haven't been there for a very, very long time. This determines what we pay for interest rates in our credit cards, and then also for our mortgages and things of that nature. So all of these things that I'm looking at are very, very negative. And believe me, folks, I am getting all kinds of reasoning from a lot of people why it's not going to work this time. But that happens, that no matter, whether I'm bullish or bearish, people are always looking on the other side. But this time it's even more pronounced than before. So we'll see how this is going to end up here the next few weeks. We should know by the end of next week would be my guess, and we'll have a pretty good idea of where we stand. We could have one more spectacular blow-off to the upside. That's always possible. But I don't think it'll be anything that the Fed does, because they've done pretty much what they were going to do, and we'll see what their next step is going to be. But we'll have to be able to see what happens with this, and we'll take a look at these things as we come in. We've got someone ask a question about taking a look at LOW. I don't know what the name of what that stock is, but I certainly can look at it if the old computer is working. And I am I will pull this up here, and we'll take a look at LOW. I don't know if that's Lowe's. That might be the building corporation. That ought to be very strong, because we supposedly have a strong housing market. And, we'll see if that's because home builders have basically topped, from what I've understand on the index, that it's made a major top. Well, it's had a 3 drive to a top pattern, and now it's had a little ABCD correction. That's really what it's done. It's nothing dramatic. It had a beautiful one, then it came down and made a bullish Gartley here just the other day. I'll put this chart in here, and you can see it. It stopped right at the 50% time, and then we'll see what happens from here. But there's definitely a 3 drive to a top pattern in the lows, but that doesn't. Let's take a look at the long-term weekly on this, because I believe this stock has gone ballistic. It's gone above. Well, let's just see. Wow, this has had a heck of a move. Wow, it went to a 1.618 expansion of the move from 2007. In other words, it had a high of 31. It went down to 12, and went from 12 to 49. So it expanded by 1.618. So it's made all the objectives that I can see. So I would certainly, that's just typical of all these others that we've looked at, so that's the same type of a thing that we're watching. Folks, if you want to play devil's advocate here, let's just take a look at Lowe's, because that's a pretty good indicator of the market. But if you just look at the weekly chart of what was happening in the market back in March of 2009, you can see that it was, making this 3 drive to a bottom pattern down at $12 a share. I remember that very, very well. And then after that, we didn't get our first really strong buy signal in Lowe's until it came down to a perfect ABCD that occurred in the fall of 2011. And from there, it went from 17 to 49. So it's made all the objectives. It's following technically is about as perfect as any stock as you could possibly have. And that's that's what we're looking at here. So Lowe's is I would be looking to sell this on a rally. That's the way I read it. Whether that's going to be the right thing to do or not, I'm not sure. So we'll see if we can get more information as the stock moves. But it certainly has completed every objective that I can find if it makes 1.618. We got to take a little break here, folks. The Dow's up a little bit, the S&P's up a little bit, and the NASDAQ is about unchanged.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and since we were talking about the Treasury notes and the junk bonds before, I wanted to put in the 30-year Treasury bonds on a monthly chart, and the reason why I wanted to put that in is it shows the same type of pattern that we have forming in the stock market right now. It's a different entity, of course, because stocks and bonds are different. This one goes back to 2000, showing the large top that is here. However, the one we're looking at in the stock market is a monthly chart that goes all the way back to actually 1972. So that goes back 40 years. So we're looking at a top of monumental proportions, if I'm correct, and I certainly hope I'm wrong this time. But we'll see, what will happen here in the next few weeks. We should be getting close, but we're starting to see divergences, and margin debt doesn't stay higher than about a month, and we're already 3 weeks into that. The bullish consensus numbers, in other words, bulls more than 50% and bears less than 15%, doesn't happen very often, and we're in the fourth week of that happening. So these are the normal things that you would expect if this is a pretty good top. This might be a time when the market melts up, because at the end of a move, like what I think we're having now, you could get something like that where things go a little bit crazy, and certainly with the Fed in there all the time doing the things that they do, you could certainly see that happening without too much trouble at all. Now we have. I wanted to switch our our program over to gold here for just a little bit because we are at a very critical level in gold. We're approaching the 1275 level, which is the 786 retracement of the low from what we had back in just a few weeks ago off of the low at the 1250 level. So it's important that gold holds that 1275 level, because if it doesn't, that means it's going to have another move to the downside, probably taking it down to near the old fib level at 1177. And the markets, all the commodity markets are bearish, folks. I know we're having a good rally in corn today, but that market's been down for a year and a half. And some of the other markets are having a little bit of a rally. And but these commodities have been very, very bearish, and they haven't turned up as of yet. Maybe they will soon, but as yet they've not been able to do that. I wanted to bring the price of the gold chart up to date just a little bit better on a daily basis, because if I can show you what's happened today, you'll have a pretty good idea that we're very close to this 786 retracement that we talked about before. And I wanted to watch that, because there's a possibility that if we break that level, we're going to be going down to the that 1230 level. And boy, it's very important, because that's another important level. The high that we made just 10 days ago in the gold, up at 1365, that was a 61% retracement coming off of the high we had at 1435. So gold is at a major spot here. It's incredibly oversold. We've been down, I think, 12 of the last 14 days, but we could still be, going lower if we break this 1275 level. That's the way it looks from the technical end of what we're watching. I hear comments all the time about gold being manipulated, and folks, I'm not sure I believe that. We've got a call in from Lou in New Hampshire. Are you there, Lou?
I'm here.
What can I do for you, my friend?
I'm just looking, is there a shot anywhere here on the euro?
You mean for the short side or the long side?
Short side.
Well, I believe it's the short side in here around this 134.10 level. That's the 786 off the last move, but there's also a chance that it could have one more big rally that would take it up above, hit that 136 level. There's a possibility of that. But right here, the risk is very small, because it's trading right at the 786 level at 134.10. So that's where I think is probably, the best place, to look at it from the short side, in my opinion. What I'll do is, if you hold on just 1 second, I will pull up the euro chart and let you take a look at it, because I happen to be involved in that particular trade right now. And if I can, here we go. We'll find it for just a second here. And I've been just looking at it on a 15-minute basis here over the last several days. And as you can see, we have completed a 786 retracement of the last high that we made, which was back on November 7th, which was that Thursday that we were looking at. So here's the place to take a look at it. And, if it gets above 134.30, I'm wrong, and that means it'll go to 135.10 would be my guess.
Yeah. Okay, so maybe I should sit on my hands and wait.
That's one of the better trades of the year, Lou.
Yeah, that's a tricky one.
Okay?
Yep, thank you.
Thank you for calling in. I appreciate it. We've got another caller from Toronto, Canada. Michael, are you there?
Yeah, I'm here.
What can I do for you?
Royal Gold. Can you show me if there's any Gartley patterns forming on the daily versus the weekly?
RGLD, is that the symbol for that?
That's the one.
Oh, okay, hold on. Is it a Canadian gold?
No. Yeah, it's like it's the rival to Franco-Nevada.
That one I don't understand either, so hold on one second.
It's a royalty. Basically, they run off royalties.
Okay.
Give me the daily versus the weekly.
Okay, well, I don't see a Gartley. Well, yes, I do. As a matter of fact, there's been a Gartley, and now we're double testing the bottom of it. So as long as it holds 44, it looks like it's got a real chance here, because we came down right to the exact 786 down there at 44.5. Then we rallied up to 53, and now we're testing that double bottom there. it looks like it's got a chance here as long as it can hold 44. But boy, below 44, I wouldn't want it.
No, not at all. What downside would you see?
You mean the upside?
Downside if it breaks 44.
Oh, if it breaks 44, that would suggest fact is, I'll put this in here. You'll see that it will make another A, B, C, D pattern to the downside right here, and that would take it all the way down to the level of around 31. That could really go a lot lower if it breaks the 44 level, because that's key support from that Gartley level. In fact, that it's hit it twice tells you that it's very, very powerful.
Okay. All right. That's great. Thank you very much.
You're welcome. Thanks for calling in, Michael. 877-927-6648 if you have any questions. And I wanted to bring the silver market up a little bit here. I don't trade silver too often, but someone had a question in it about, the bullish or bearishness of the silver. And, of course, we're looking at pretty much the same thing when you're looking at gold. You're watching the same type of charts. But as you can see, I'm going to post this chart into Tiger TV in just a second. We've come down and made a 786 retracement in silver today also. But we're not getting any bounces off these numbers, folks. That's the thing that is a little bit scary when you look at these. We've been down 9 days now in silver, very, very quietly, and but it's still down into that area. We'll find out if the market in silver and gold are manipulated someday in the future, but frankly, I don't know whether that occurs or not. History tells us that people that try to manipulate markets get burned really badly. That's what history tells us. Whether that happens this time or whether it's even a function of the market this time, I'm not really sure if that is occurring or not. The only thing I'm really sure of is the fact that we are looking at a situation in the stock market where I haven't seen this many bearish things happening in a very, very long time, and it makes me wonder, what is going to happen here in these next few months because of the fact that we have so much bearishness in the charts. I mean, there's no bearishness in any of the fundamentals or any of the news or anything that you see like that, but the charts that I'm looking at are just incredibly ominous, and as bad as I've seen it in all the years I've been looking at this. I've been watching these charts for 60 years, and I've never seen charts this bearish. I mean, they're from a technical point, but then nothing to do with fundamentals. This is technical. One of our listeners just said, okay, enough of the bearishness. Move on to the next subject. Okay, very good idea. Very good idea. So we'll see how the next one works out. I wanted to bring out the chart for the correlation between the Japanese yen and the chart for the hold on here just a minute, for the Dow Jones, for the Nikkei Dow and the U.S. dollar Japanese index. That's U.S. dollar versus the Japanese yen Forex, and it shows the correlation is better than 70%, 90%. That means that if the yen breaks out to the upside, that means that the most probable move of the Nikkei would be to the upside. Now, the Nikkei was up about 180 points, which was virtually a very small move of 1.4% last night. Whether that means anything, on a longer-term basis, we'll have to wait and see. Now, I want to talk just a second about the VIX index, because there's a possibility here that we could go into new low ground into the VIX. We're down today, and we could easily go down another $1 to the 1190 level. But again, the VIX is at levels that, whenever we get to these levels, the market usually has a pretty good rally from those levels. Whether that's going to have history's going to repeat itself this time or not, we don't know. But this is what we're trying to find. Thing. I wish I didn't have bad news on the stock market with these patterns, but that's what we're seeing. I mean, you can't really changed the patterns. I mean, they've been here forever, and what's so scary is they're so long term. And then when you look at them on the shorter term, you're seeing the same thing happen as you go through, chart after chart, and with stock after stock. They're just, one after another of these stocks that are, hanging in there at these levels. I want to feature one stock here today. I don't do stocks too often, but I wanted to show this one because this is something that we all use, and that it's one of the more popular stocks in the NASDAQ, and that is Amazon. And I wanted to show you this because Amazon left a huge gap here way back in October. Then we had a little bit of a pullback of about 12, 15%, and now we're staying in this area right here. Folks, if this market would gap down below the low that we made just the other day at 341, that's only $8 away, that would leave an island reversal, and that would be one of the most bearish patterns that you can find in all of technical analysis. It has a probability of winning of better than 95%, but you don't see them very often. So the only way this would work would be to have the Amazon close around the 340 level someday, and then gap down the next day below the 339 level, and that would leave an island reversal. If you don't believe that island reversals are important, just go back and look at the chart of Apple when it was trading at 700. Let's do that since we're doing our show here. Let's pull the Apple chart up because I like looking at Apple. Never bought an Apple product yet, but I will one of these days. I'm going to see if I can find Apple. Oh, dear. Are you kidding me? Well, I've lost the data for Apple. Let's just see if I can pull it up. Boy, my computers don't like Larry today, but that's the way it goes. Okay, here we are. And we will take a look at this here. We're going to go back and look at it from where we were way back in when the market was making a top, and I'm just going to draw this in so you can see it a little better here, and I'm going to be able to take a look at it. But if you look at the stock here of Apple back in September of 2011, no, 2012, no, it was 2000. Yeah, wow, it's 2011 already. Holy cow. Anyway, you can see that Apple up there was just hanging up there at that $700 a share level, and then one day gapped down and left that island reversal. And it went from 703 down to 384. It dropped pretty much in half. So if that happens to Amazon, just be careful. That's just just one of those things that you want to see. If you want to see an island reversal on the bullish side, all you have to do is look at that same Apple chart, and I'm going to repost it with the island reversal on the bullish side, and you'll be able to see that when it was at 570 and left an island, it went straight up to the $700 level. So these island reversal patterns, even though they don't happen too often, they've happened a lot in Apple over the time. As a matter of fact, we could do a course on island reversals with Apple because we have another one that has formed back here in November of the previous year. We've got to take a little break, folks. 877-927-6648.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and the last chart one of the last charts that I'm going to post into Tiger TV today is the correlation between the euro U.S. dollar currency pair versus the S&P cash. And as you can see from this chart that we're making this 3 drive to a top pattern in the S&P cash, and yet we're starting to see a divergence now in the euro, where the euro has started to turn down. Now, this correlation is not anywhere near what it is with the dollar yen versus the Nikkei. This one only runs around 70% of the time, but it's also showing you that selling has started to come into the euro at the same time as that these patterns are forming on the upside, with the stock market. If we take a look at the euro on a longer-term basis, and this is one of the trades that we were focusing on just a few days ago, and that was the big Gartley pattern that we had forming at the 138 level, and that gives us a target on the euro down near the 132 level. We've already dropped 4 points, in just a matter of a very, very short period of time. So it's not unusual for the euro to have a rally in here because we've come down so much. The question is, how much of a rally are we going to get, and if we are going to get one? We don't know that, but no one else does either. That's the good part of what we're looking at here. But the trend is still down. The question is whether we're going to get much of a rally. We waited for a rally in bonds, to that 136 level, and it never came. We never got any higher, than 135 and change, and so it's telling us that that market was very, very weak, and the euro is doing the same thing. We're having the same thing happening in the British pound. The British pound is also weak. Once the British pound breaks the 158 level, it's going to have some serious problems because it has so much resistance at the top and very little support at the bottom, and that gives you the parameters for something, getting ready to come down, quite a bit. Okay, the next order of business. Oh, I know what we need to do is we need to take a look at the oil market. If you'll give me 1 second here, I wanted to show you crude oil because it's in a very precarious situation here because we've had very little rally here over the last 5 or 6 days, and the last time that happened, we had a really strong move to the downside, and all oil needs to do is to hit 94, and it'll be on its way to $90 a barrel. By the way, here in Tucson, Arizona, gasoline is under $3 a gallon for the first time in quite a few years. I think well over 4 years, and so people here are rejoicing in the streets, as they should be, I guess. But gasoline prices have been dropping, oil prices, copper, cocoa, coffee, just all these things. Corn made a bottom probably on Friday for a little bit anyway. But these commodity prices are come down a lot, and that's also what happened, in 2007 and 2008 when we had the crisis with the housing market. So these are things to keep in mind. I just don't want you to get hurt. I hope I'm wrong. And remember, I'm wrong a lot, and I'm right once in a while, so just keep that in mind. Always have your stops in. I've said all along, and I put this in the newsletter several times now over the past few weeks, that the key number to watch is 1733 in the S&P futures. We got down to 742 and change on Thursday, and then the market, reversed and went right back to the old high again. So that happens. I mean, that happened in 2005 at the lows, and it happened in 2007 at the highs, because these are, it's hard to get the high or low, and that's why it's more difficult using time than anything else. So you've got to be at least prepared to see what's going to happen to this. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.